conversation. Take care. So he was about to leave, and I was just so inspired by his ability to still want to learn even though he was deaf. There are so many people out there that have everything. They can hear, they can speak, they can touch, they can smell, but they don't take full of advantages of opportunities. All right, we're going to start off here. All right, we're going to start off right here. Make sure you got your notepads and pen. Today, team, we're going to be talking about the swing highs and swing lows, how you can identify the head and shoulder pattern. Whew. Oh, man, I don't know if y'all are ready for this, man. How you can identify the head and shoulder pattern just with the break of a previous swing low. Yes. How are you going to be able to identify the head and shoulder pattern the moment the market breaks the swing low? The swing low could be one candle. The swing low could be 3 candles. It doesn't have to be 100 candles. Oh, watch this. Oh, man. Watch. Here we go. I'll start off with some basic fundamentals about different market states. A market consists of 3 basic states. Write this down, team. Up, down, or sideways. Okay? The market consists of 3 basic states. Up, down, or sideways. Now, there is, of course, a wide variety of combinations of the market states, but the basic flow of the market is constant flow in and out of these 3 states. The market, for example, shift from up to sideways to up and to down. Okay? Now the market is going to shift, it's going to go from up to sideways. Think about this for a second. The market goes up. What type of move that's? That's a large buying move. When the market goes up, that's a large buying move. Now when it shifts from up to sideways, hey, the market ran out of steam. That's that 25% pullback. And then it goes from up to down. Okay? And then sideways. The market moves in 3 ways. Up, down, and sideways. So, is everyone writing that down? The market moves up, down, and sideways. Okay? All right? Perfect. The market moves up, down, and sideways. Type 1 inside the box if you have that. All right? I'm not going to go too fast. I'm going to take my time tonight. Type 1 inside the box if you got that. Perfect. Now, it is important for us as traders to be able to correctly identify the market states when trading. Okay? It's very important, traders, to be able to identify if you're in an uptrend, if you're in a downtrend, or if the market is going sideways. Where am I? Am I going up? Am I going down? Am I going sideways? We have to know. Okay? The market has inertia, and it tends on doing the same thing that it's been doing for the longest. Okay? Therefore, it's important for us to identify the correct market states so that we can enter the high probability trades and not fight the market. Okay? I don't want you guys selling in an uptrend or buying in a downtrend or even entering in a trade when it's doing nothing, moving sideways. I don't want you to fight the market. Let the bulls and the bears fight each other. That's not your fight. Mind your business when the market is moving sideways. The only time you're going to jump into this fight and break it up is when there's a large movement. Okay? Now you're waiting for the market to retest. When that market breaks out and then come down to retest, you jump in and break up the fight and say, hey, listen. Can we all just get along? Let's all just get along. No more fighting. Now let me get some of this money. That's when you get in. Okay? Now, let's quickly define the three different market states and how they are violated. The key word of the day is violated. Team, what is the key word of the day? The word of today is violated. Okay? The key word of the day is violated. Now, in an uptrend, write this one down. Uptrend. A series of higher highs and higher lows give us an uptrend. That's right. A series of higher highs and higher lows give us an uptrend. The uptrend is broken when the market breaks the previous highest low. I'll repeat that again. A series of an uptrend, this is what an uptrend is. An uptrend is a series of higher highs. The market pushes up, pull back. The market makes a new high and pull back. That's an uptrend, when the market is making higher highs and higher lows. But when the uptrend is broken, when the market breaks the previous higher low. Now let's talk about a downtrend. A downtrend is the reverse. A series of lower lows and lower highs gives us a downtrend. The downtrend is broken when the market breaks the previous lowest high. That's right. That's a downtrend. It's a series of lower lows. Now, we love when the market is making these series of lower lows. Because when the market drops down and pull back up, what do we normally do? We draw a line. And we title that the left shoulder. When the market drops down and pulls back up, we draw a line and we write left shoulder. If the market breaks and make a new low and pull back, we draw a line and we write left shoulder once again. Type 2 in the box if you're following me and you understand. Well, of course you're following because we talk about this every single day. How often do we talk about this? Every day. Whoa, that's right. So type 2 in the box if you're following me. You're writing this down. You have your notes ready because now your mind is about to be blown. Nope, I'm not drawing. I'm actually drawing in the air when I talk, like hand drawing. But no, I'm going to drop the screen in a second. I just wanted you to see that. Woo! Let's go! Perfect. Here we go. Now, you might want to draw this one out. Okay, you guys might want to draw this one out. So let's take a look at the top screen first, all right? Now, we're going to talk about a violation. Okay, violation. Flag on the play, we got a violation. We got a flag on the play. We got the Eagle Cowboys just flattening all the footballs, and the Patriots, first down, Patriots. What? Yep, we got a flag on the play. Uptrend, uptrend, uptrend. What do you mean? Now, let's take a look at the top one on the top. Okay, so on the top, notice the market is making higher moves. Okay, the market goes up higher and it pulls back, and that creates our left shoulder. The market goes up higher again, making a new high and pulls back. That makes another left shoulder. Same thing on the bottom. The market drops down lower, pulls back, and drops lower, making left shoulders. We just spoke about this, okay? When the market drops low and pull back, we write left shoulder. When the market drops lower, breaking the previous low, and pull back, we write left shoulder. Okay? All right, everyone got that? Make sure everyone has that right there. Boom. Left shoulder, left shoulder. Okay? Type 1 inside the box if you got it so far, if you follow me. Now, real quick. You see at the top, let me go over here, right over here on this zone here. As this market is moving up and comes back down, this is my low. Okay, this is my low. Now, I don't know if this is going to be my left shoulder just yet. The time where this becomes my left shoulder is when the market breaks and makes a new high. So now this is my left shoulder. I can actually put this box here. That's my left shoulder. But I'll just put it here for now. Okay, there's my left shoulder. Now, the market goes up, makes a new high. This becomes my left shoulder. Now, I want you to look at this low right here. This is a very important part right here. Okay, look at this low right here. You see this low right there? Right here where my mouse is at. Once the market, here's my swing low, here's my swing high. My swing high is the head. What's the head? It's called a swing high. And the swing low was the previous low, and the market went up, made a new high. That's right. And the moment this market goes from an uptrend to a violation of breaking the previous low right here, oh, violation, flag on the play. Why? What did I do? You broke the previous low? Oh, man. Yep, you broke the previous low. That's a violation. We were in an uptrend. You broke the previous low, and you're taking the market back the other way. Violation of an uptrend. Type 1 inside the box if you understand how an uptrend can be violated and turn into a downtrend. If you understand how an uptrend is violated and a reversal is starting to form, type 1 inside the box. That's right. That's how violations happen. That's how reversals happen. The moment you break the previous low. And the same thing happens over here. The market drops down, pull back, we draw a line. Right here. Perfect. And then the market drops and make a new low right here. Pulls back, we draw a line. But then the market drops down and shift all the way up, breaking what? Breaking the previous high. No, you did it again. Oh, you did it again. What did I do this time? You broke the downtrend. That's a violation. But how is it a violation? When the market breaks the previous high. Oh, you're right. I did it again. Here's the previous high. And when the market breaks the previous high, I broke the previous high. It's a violation of a downtrend. Now it's a reversal. Oh, I'm so sorry. I'm so sorry. Now the bulls are taking over. Who are the bulls? Oh, you know the people that's buying in the market? Those are called bulls. Oh, and the ones that are selling, those are bears. Yes, because bears, when they strike down. Oh, wow. So that's where it came from? Yes, bears, they strike down. And when a bull is striking, a bull strike up. So that's why the market is moving up, and we call it the bull market. Thank you for clarifying that. Thank you. Type 5 in the box if you understand it, and we can keep going. Type 5 in the box if you understand it, and we can keep going. Perfect. Let's go. Well, the one thing we haven't spoke about, we spoke about a bull market. We spoke about a bear market, but we never spoke about the sideways or ranging market. Okay, all right. What is a sideways or ranging market? It kind of looked like the traffic in your city. Okay, I need everyone inside the box. Type in the worst roads to be on in your city at 5 p.m. What's the worst road in your city to be on at 5 p.m.? I want you guys to get to know each other right now, because some of you probably live in the same city and you're going to say, oh, no, it's this one. Nope, it's that one. Get to know your city. The worst roads to be on in your city. Because that's a ranging market. 285. Woo. Okay. Flatbush. 85 North. Okay. Times Square. Hey. I would say the Cross Bronx or the Major Deegan. Oh, FDR? Yeah, you're right. You're right. FDR. That's right. Ooh, Western Avenue. Oh, man. All of them, huh? Peachtree. It appears that we have a lot of Atlanta. Tara Boulevard. What you know about Tara Boulevard? It sounds like we got a lot of Atlanta in here right now. I-84 West. Let's go ahead and get into it. Hey, you guys telling me I ain't going to none of those streets. Let's go. So a sideways market is said to be sideways when a fourth pivot is formed that has not broken the range support. Okay? So when the range of support has not been broken, the range of resistance has not been broken. So remember, okay? Remember, when the market is in a range, the market is going to create a high and a low. When the market fails to break the high, which is resistance, when the market fails to break the low, which is support, it's trading in a range. Okay? It's trading in a range. Now, I want to show you what it looks like, and then we can go over to the other screen. So the market moves up. This is your initial move right here. All right? Right here is your initial move. And then the market pulls back. We can't say this is a range because the market from A to B makes a new high. Okay? There you go. Notice how the market goes from A to B to make a new high. So now we know that A is my support and B is my resistance. Well, right here was my support and this was my resistance also. Support and resistance. But we broke out of it. Okay? Once we break out of support and resistance, we're no longer trapped in a range. We're no longer trapped inside of a box. But what happens when the market does this? The market drops down. Uh-oh, it stopped here. Hey, why did you stop there? Keep going. Keep going. Break the support. You're right there. Sacked at the 25-yard line. Oh, man. And then the market goes back. The quarterback pushes back. He pushes back. And boom. Sacked at the 10-yard line. The market is trading between the 20 and the 10-yard line. And then the market, he throws, he's running. He breaks the previous low, he's running, but he stops right here. Type Y for yes, N for no, if we are still in the range. Type yes for yes and no for no, if we are still in the range. Yes, we're in the range, and 2, we're not in the range. Yes, we're in the range, and no, we're not in the range. Are we still in this range? Yes or no? Good stuff, good stuff. I love it. You guys are smart. Uh-oh, someone said no. Someone said no. I saw the no come up. The chat is moving so fast with yes that the no just disappeared. Yes, we're in a range. Yes, we are stuck in a range. Is there a video to show how to use Rama? If I showed you how to use levels, you would still be confused because I'm actually showing you how to use levels right now. You're learning how to use levels right now. This is it. Understanding this right here will help you identify levels. Okay? So, Rama 777, I just need you to stay focused and take notes on this. Because if you skip all of this and go straight to the video, you're going to be lost inside of the sauce. Let's keep going, team. So now, we're stuck in the range. And then at number 3, the market bounces up to number 4. We're stuck in that range until we broke out. Okay? Same thing with the lower range. Okay? Same thing with the lower range. From A to B. Notice how the market is stuck in the range. Okay? Perfect. Good stuff. Good stuff. Now, which box is stuck in the range? Is it box number 1 or box number 2? Okay? Is it box number 1 or number 2 is stuck in the range? Let's see if you guys understand the range. Is box number 1 stuck in the range or box number 2? Someone says number 1. Okay. Y'all said number 1 is stuck in the range, huh? Number 2, we got 1 2s. We got 2 2s. It's a tie. Someone says both. 2, both stuck in the range, both. Okay. Well, the answer is number 2. Okay. Number 2 is stuck in the range. And I'm going to show you why. Remember your starting point, right? Market goes up. Here's your A, B. The market comes down. You see right here? This market goes from this part and breaks the previous range. It breaks out. Okay, I'll do that again. Here's the start, A, B. It comes all the way down. And then we start the next move and push the market out of the range. Now let's take a look at number 2. The market comes in the range, boom. It pushes up and then it goes down. This is your range right here. This is a small little range right around here until we get this push to break it out of the range. All right? Type 3, if you understand it. It's going to be followed by a swing point. Okay? See? Market pushes down, goes up, down, goes up. It makes that W formation or that M formation. Okay? Let's go back over so you can see the range. Here it is. Here's the range. Boom. Here's a strong move. And now, 1, 2, 1, 2, break out the range. Got it? Perfect. Good stuff. Good stuff. Okay, we're making progress. We're making progress. All right. Do you guys truly understand the range now? It's very important to know where you are in the market, because the moment you understand this, levels will be a piece of cake. Confused on where it broke out. Okay. You see right here on number 2, the market drops down, then it pushes back up. Let me just get one of these for you. I don't want anyone to be confused, especially on my session. Okay? So I'm going to show you why this was arranged. Market drops down. Copy, paste, paste. And then the market goes up. And then the market comes back down. You see that W formation that is forming now? Okay, so that W formation that is forming now. Okay, now I'm going to show you where it broke out at. Now it broke out here. Boom, right about there. Okay, see? Boom, 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 breakout. Unlike this one over here, this range, this market goes up, makes my large move right there, comes down, and then look what happens. No breakage, it goes straight up. Boom. Breaking out of the range right there, even though it's a wick right there. Okay? Y'all got it now? Make sense? Perfect. Good stuff. Good stuff. I might just keep this on the PowerPoint because I know we're going to get that question again. Okay? Perfect. All right. Now, let's take a look at a live chart. Okay? The 3 different market states: uptrend, downtrend, and sideways. Now, starting on the left side of the screen, we're going to find out where the market had a change of uptrend to a downtrend. So right here, boom, market is moving into a downtrend. Okay, and you're probably saying to yourself, but whoa, where was the break? Okay, where was the change? Okay, boom, right there, that blue line, then the market shift up into an uptrend. But where was the change? You see where the box is at on the second one where it says change of downtrend? Well, we had a previous high right there, and when the market broke it, now we have a change in direction. And then, boom, is when the market is moving sideways. Okay? So, I'll show it to you here. Right over here is my swing low. I know, sometimes we have to go back to the basics. Here's my swing low. Here's my swing high. Swing low, swing high. The moment we broke out of this swing low, okay, the moment we broke out of the swing low, well, we just created something. We just created a change in the trend. Boom, broke the swing low right here. Now we got a downtrend. The market drops down, pulls back. Remember in the beginning what we spoke about right over here? Drop down, pull back, draw your line. Drop down, pull back, draw your line. Remember we spoke about that in the beginning? Look what's happening. Drop down, pull back. Here's my high right here. Here's my swing high. The market drops down this time. Okay, let me copy this right over here so you can see it. Drop down, pull back. Let me change the color. And the market drops down lower right here. Change the color again. Perfect. So now, after this market drops down lower, here's my swing high right here. Now I got to figure out. I'm like, whoa, let me get out of here. How do I break out of this box? I don't want to be trapped in the range. I got to get out of here. Let's go. Let's get out of here. And guess what the market does next? Here's the low. As this market pushes up, look what happened. We break the previous high. Okay, retest, push it down. Retest, push it down. Retest, push it down. We break the high. Boom, right here. As a reversal. Okay, there's your reversal in the market. It's the same thing when I'm teaching you guys how to trade the head and shoulder pattern. Okay, if this is my left shoulder right here, okay, if this is my left shoulder here and the market shift out the low, okay, let's think about levels for a second. Okay, here's the left shoulder. Okay, perfect. There it is, right here. Left shoulder. Type 1 inside the box if you're still with me. If it makes sense, type 1 inside the box if it makes sense. Woo! We on fire tonight. Type 1 inside the box if you understand. Right here, this is my left shoulder. The market broke lower. Now, what is the one thing that we need? We need this market to break the previous swing high, also giving us a 100% retracement of the previous high. So we're going to put 100%. Did the market give us 100%? Yes. That's what we want right there. The market gave us 100% right there at the top. Okay? Now that we know that the market gave us back 100%, now all we're looking for now, traders, here's the fun part. This is all we're looking for is we're just waiting for that market after making 100%, come right back down to this line over here. Okay? That's all we're waiting for. Look at this. Come on back home, baby. Boom. There it is. Come back home. Now the market came back home. Now, it may not take off right away. Might go into consolidation. But look what they're doing to us. Woo! Let's go, baby. It's all making sense now. That's right. Let's go. Told you. I was inspired. I was supposed to come on here and teach, what I always teach. But I was inspired today. I created this PowerPoint because I'm going to send it to the guy who's mute, who's deaf. And I want to create everything in this PowerPoint for him. No. I'm not looking to sign him up in the business. I would never sign him up in the business. Here's an opportunity for him. And I'm challenging myself right now. This PowerPoint is a challenge for myself to see if I can teach someone off of this PowerPoint how to trade who can't even hear. Oh no, I can't send him a video because unfortunately, due to his disability, the video, he's not going to be able to hear it. And I don't have the tools to put subtitles. So guess what I can do? Y'all have no idea. Y'all have no idea how I'm challenging myself. And I need some of you to go out above and beyond and challenge yourselves tonight, today, in the morning. Every single day that you wake up, I want you to challenge yourself. I woke up inspired. Had no idea what was behind the inspiration. But the moment I left my house and God put me in the right place, the right time with the right people, and I found my inspiration. Some of you need to wake up inspired. But, or what am I inspired by? What am I inspired for? No, don't worry about that. The inspiration is going to come to you. Oh, okay. I'm waiting. Where's the inspiration? Open up your eyes. It's right there. Open up your eyes. The inspiration is right there. There's inspiration all around you. All around you. All you have to do is open your eyes, pay attention, and accept it. You should be inspired to go out and help the next person. Okay? You should be inspired to help someone without looking for some type of reward. Well, yeah, without looking for some type of reward. I challenge myself. No one else challenged me. I didn't put this guy on video and said, hey, look, guys, I just met this person here. He can't speak, and I'm going to change his life. No, I didn't put him on video. Everything don't need to be on social media. Everything don't need to be on video. All of your good deeds don't need to be displayed for the whole world to see. This deed right here, I'm challenging myself. I'm going to present this to him and let God work. That's right. That's right. Let's go. Let's go. So now, as we see the market right here, the left shoulder, the market drops down lower, breaks up higher, breaking the previous swing point right here. Okay, the previous swing point. Guys, I mean, yeah, you can enter the trade here, take the buy up. Cool. Perfect. Okay, you can sell after the previous swing point over here. And when you understand what these swing points are, this market stopped right here because we broke the last swing point. Okay, it stopped right here at B because we broke the last swing point. We're retesting that swing point over there. That's right. And conclusion. To conclude this article about the trend identification and the second step of my analysis, here's what you need to know. Identify the trend, and the TTF is the time frame. Okay? I use the 1 hour time frame. Okay? All right? The trend time frame. Trend time frame, I use the 1 hour. Okay? Now, is it up up, down, or sideways. TTF, trend, time frame. If the trend is up, all I want you to do is mark the trend violation point. Whoa, what do you mean? What do you mean, mark the trend violation point? Okay, that's where you lost me at, Oren. All right, you're coming up with stuff. What is the trend violation point? What does that mean? Oh, okay, my bad. I forgot to tell you what the trend violation point is. You see right here, this is that swing point right here. Okay, if the market is up here, okay, where's the market? If the market is up here, right here, if the market is currently up here, I have time to identify where the trend violation point is. Oh man, I think that did it right there. That's it right there. Yep. Some of you are going to walk away tonight and say, whoa, that's all I had to look for? Well, here's the current market. All I have to do is find the violation point. Because if the market breaks out of this point right here, oh, it's a trend in that direction. Look at this. Breakout, retest, take the trade. Oh, let me repeat that again. Yeah. So the market is currently right here. But where's the breaking point? Oh, it's right here. Okay. You know, and then we broke out. Alarms and bells are running off. And now it's a change in direction. Boom, boom, boom. Okay, same thing. Reversal. Now, if the trend is down, all right, if the trend is down, mark the trend violation point. The recent low is high. If the trend is sideways, mark the range of support and mark the range of resistance. That's it. If the trend is going sideways, you're going to look for the support, the range support, and the range resistance. All right, you lost me there again, Oren. What do you mean? The range support and the range resistance. Oh, my bad. I forgot to tell you that. So if this is the range high and this is the range low, and the market is moving sideways, all you're going to do is box it up like some Chinese takeout and let the market bounce off the floor and ceiling, floor and ceiling, floor and ceiling. That's it. Yes, that's the range. So when the market is trading off the range, you wait for the market to break out of the range. Oh, come on. Now it makes sense. Okay, I got it now. All right, so let me show you this. Boom. Red candle forms. What am I going to do? Am I going to buy or sell? Nothing. Why? I don't have enough data. Okay. Green candle forms. What am I going to do? Nothing. Why? Because you don't have a swing low or swing high. That's right. Boom! Red candle forms. Now what am I going to do? Red candle form, I'm going to mark my range. Boom! There it is. Mark my range. Okay? All right. Cool. I like that. So what are you saying? Well, if the market comes past that white line, boom, there's my green candle. Oh, no. But the green is higher than the red candle. Yes. I just made a new high. So the red candle was the previous high? Yep. So the red candle is the previous high? Yep. And the green candle is a new high? And you've already identified the breaking point of that range? Yep. Now what do we do? Oh, watch what happens next. Oh. Did the market break out of the violation part, that range? Did that red candle break below that white line? Yes or no? We can clearly see that the red candle broke below the white line. Now that the red candle broke below the white line, All you have to do is identify. There's two ways to enter the trade. Two ways to enter the trade. But my favorite way to enter this trade, is on a head and shoulder pattern. See, what we did was, after the green candle was formed, we broke that low of that range, giving back 100%. Now, you see on the left side of that green candle, the left side of the green candle, it's lower than the green candle. So that's going to be my left shoulder. The green is my head. So I need the market to come back up equal distance to my left shoulder. Boom! Right there at the white line. So because that market dropped down 100% on that red candle, I need to see the market come back up. One. Ooh, look at this. Come on, baby, you can do it. Boom! Right there. So can someone tell me, if you get it right, you change your life. If you get it right, you change your life. Can someone tell me, what are we going to do? Are we going to buy or sell? Look at all the volume that's in that green candle. Are we going to buy or sell? If you get it right, you change your life. Or we're going to buy or sell? I think I'm going to change my life for 1 million. Pull the trigger and sell the market. All right, drum roll. Drum roll. 1 million on change your life. Let's see. Boom! Let's go! Woo! Let's go, baby. Let's go. Sell that market. Sell that market. There it is. There it is. Right in the front of your face. And that's it. That's trading. That's right. That's trading. Okay? Here's a live chart on levels. This was actually less than an hour ago. Because you see the current market was dropping down. Uh-oh. RCJ Tolbert is confused. All right, maybe this can help you out a little bit. Okay? So let's take a look at this. All right, this is the current market on levels, right? So, boom. Right here at the top of that yellow box. Over on the yellow box. Yep, it broke the high first. That's right. Now, notice on the top of that yellow box.
It's 10 o'clock.
All right, top of the yellow box, we have a high. You see the yellow box on the left-hand side? We have a few candles sticking up at the high. Now, you can trade levels the same exact way. Okay? See that box here? Right here. You see that little candle wick right there? That's a swing low. Okay? That's a swing low. There's so many ways to trade levels. You can trade using the boxes, or if you don't want to wait for the market to form from Monday to Monday, you can trade what I just showed you, swing lows and swing highs. So that little point right there is a swing low. And now, that red line right there, we'll wait for the market to come back up to that zone, and then we sell the market. Okay? Notice on the bottom, we broke out of Monday, and then when we come back in, we sell the market. So let me show you what it looks like over here. So right over here, this box here, the market drops down on Monday, and it pushes up and stops here. This becomes a swing point. Then the market shifts up higher. Okay, the market shifts up higher. In order for me to trade this as a head and shoulder pattern, okay, in order for me to trade this as a head and shoulder pattern, I need this market to drop lower, breaking out of this. Okay, to drop lower, breaking out of this, And then I need for it to come all the way back around and wait for a retest right around here. Now, yes, the market went against us just a little bit. It was only a few pips, but then it dropped down in my direction, giving us the trade that we need. Type 1 inside the box if you understand it. Okay? Type 1 if you understand that. Okay, that's just one way to trade it. And then you have your levels system, trading the Mondays. See this box here? Notice the box broke out the low of Monday. Okay, here's the Monday's box. Monday is always your left shoulder. Monday's box, it's always your left shoulder. Notice the market broke out the low of Monday. In order for us to trade this, okay, in order for us to trade this as a head and shoulder pattern, after breaking out of the box, we need the market to come all the way down. There's the left shoulder. Okay. And then we need this market to shift all the way back up just to the top of this line right here, to the top of this box. That's it. We just need to shift to the top of this box. Now, we don't care if it goes higher. But now, all we need this market to do next is to come right back down to this line. See this line right here to the bottom of this box? And that's what it did. Boom, right there. The only thing that we're looking for this market to do next is to buy with confidence. And that's what it did. Okay? All right, follow me, team. I want you to see this. Everyone should understand this part now. This is the basic part. So now, this is what we have. Left shoulder, your head, your right shoulder, you buy the market. And the market went up for the desired pip amount, which is 25 to 30 pips. Type 5 in the box if you understand. I just showed you 2 ways to trade Mondays. Okay? Number 1 is swing points. Number 2 is your left shoulder, your right shoulder, and your head. Type 5 in the box if it makes sense. And if it doesn't make sense, you can always go back and watch the other videos leading up to this one here. Because it all makes sense. Okay? Perfect. Good stuff. Now, we got this stuff on here. Market drops down. Boom. Boom. Perfect. Good job. Good job. There's my inverted head and shoulder. Pull the market back this way. Market shift up that way. And the market moves and makes money. Perfect. Now, this is the same chart. Okay? This is the same chart. But there's a head and shoulder pattern right in the front of your face. And it goes like this. At the black line is your high. Don't worry over to the left. Looking at the current market. At the black line is your high. Right here is your swing low. Yep. Right at that point right there is my swing low. Now, let me test all of you on here. Let me test all of you on this call right now to see if you truly understand where our entry point is. Take a very close look at the market right now. The top black line horizontal is my head, and then where the arrow is pointing, my swing low. Which candle gave me my entry, and what was my entry? What was my entry? Was it a buy or a sell? And which candle was my entry? Let me see if you guys are paying attention and looking at your notes. Remember, if you ever get confused, go back to your notes, because your notes will take you to the money. Let's see. The long wick? Oh, yeah, the long wick is the answer. You understand why that long wick was the answer? Ooh, Carver Christian, nope. 49 Livingston said it was a buy. TK Gatlin said it was a buy. Sell at 124.06. Yep. The sell is right. I don't understand why you guys say it was a buy when you can clearly see in front of you that the market dropped down. Okay? But now I want you to tell me why it was a sell. Okay, the right shoulder. Okay. 120. Okay. It was a sell, but tell me why. Let me see if you guys got it right. Let me see. Violation. Yep, that's what I want to know. For ex-soldiers, the violation. Okay, broke the previous low. That's right. We broke that previous low. Where? Right here. Here's the previous swing point, and we broke it right here. Okay? We broke it right there. We came back 100% of that previous low. And the next candle shot all the way back up, giving me my entry to take the market down. You got it? Does it make sense? These are the little details that happen in the market. Okay? I'm showing you how to catch these beautiful entries. The violation. Okay? Showing you how to catch these beautiful entries. This right here was the swing point. Notice when the market went up, came back down. Right here. It went up, came back down. I'll show you the up. The up point happened here. It went up. That's right. Ah, good stuff, Lorenzo. Perfect. It came back down. Good stuff. Right here. Once that market does that, does this move here. Shift up, down. This is your swing point now. Pushes back up. Now we have a new high. The market came and broke that position. Shift up with a wick, grab your entry, and took it down. Okay? Perfect. This is GBP USD. Same thing happened on GU. Okay? This is a trade that we call on GU. Take profit got hit. Not the stop loss. The stop loss is up here. Take profit got hit on this trade. Right here, the market goes up, pulls back down. Here's a swing point. Market goes up, makes a new high. All of this is the head. All of this is the high right here. Then the market comes all the way back down, breaking out of the previous zone. And then guess what happens? It shifts up, retesting the bottom of this box and dropping down. Okay? And now, let's take a look at Euro GBP. This is the current market right now, Euro GBP. So notice how on Euro GBP, the market breaks out of the high. Okay? What we need to see, here's your previous high. This is the current market, so you can go on Euro GBP and take a look at this. The market makes a new high. Boom, new swing high. We need for this market to break out. Okay? We need for this market to break out of the previous swing high or the swing low. Once we get back 100%, there's my swing low. Now we need for this market to come back up to the zone here. Give me my entry, sell limit, take the market down, and take profit 25 to 30 pips. Perfect! want to thank you all for tuning in today. It's definitely been an amazing session. Let me see, screen capture. Oh, perfect. Thank you all for tuning in. I hope you all enjoyed the session today. I hope you all enjoyed the session. It's always my pleasure to go above and beyond. Go above and beyond and share my knowledge with you, because every day when the market is open, it always share. It always just it's something in my mind just create. I don't know. Maybe I could have been a teacher in a school. If I was a teacher in a school, trust me, those kids will have so much fun learning. I'll find so many new things to talk about. I probably go outside of the curriculum and start teaching them, what they need to learn. Just had the light bulb moment. That's right. Well, thank you all for tuning in. God bless you. Good night.